Hi, so today I want to show you a super cool tab on the WhaleFin web platform, although it's also available on the app, which is the Invest tab. And I'm going to show you how I use it to optimize my holdings and my entry into a given asset, in this case, either Bitcoin or Ethereum. Before I go further, though, I really want to highlight this is not financial advice. So if you've looked at my other videos or the content I typically share on social media, you know that I tend to be quite risk averse. This type of setup, a little bit more risky because you start playing with derivatives in different dimensions. So I really encourage you, I ask you to go on Google and just study, like literally research derivatives, options, margining, all that stuff, because it will help you understand the setup and the risk exposure of the contract. That being said, right now the point of this video is to kind of just show you how I use it to kind of optimize my activity, and hopefully that will be helpful for you guys. So right now, if you look at the page, we're not on the Invest tab just yet. We're on the Trade tab on a spot section. And I just want to show you a basic way to input an order if you wanted to buy Bitcoin. Let's say right now the price of Bitcoin is at 20,000. You put an order for a price lower at 17,000. You choose an amount. Let's say you want to use all the US dollar you have on the platform. So 7,887. Click buy. You've got a good till cancel buy order at a limit price of 17,000, which is equivalent to 0.463 Bitcoin spot. Click confirm. Sure enough, you scroll down and you can see that you've got a running limit buy order at 17,000 for that amount of Bitcoin that's running, right? Is there anything wrong with this? Absolutely not. It's kind of my way of trading. That being said, the kind of inconvenience is that you're not monetizing the base capital of your order. So that 7,887, you're not monetizing it. It's locked into that order and you're kind of waiting for the market to potentially hit that 17,000 limit price or not. But either way, whether it hits it or not, while the order is pending, you're not monetizing your capital. Now I'm going to show you a way that I think is better to put something very similar, but to monetize your market view. Actually, you can see it, it's a timeline, monetize your market view by using the Invest tab, which is essentially giving you access to dual currency products. But it's worth noting it's not available for all clients in all jurisdictions. So go and check out if for you it is available. But so here we're going to go, I'm maybe going to move my window up to a different place. Oops. So here you can see we're in the Invest tab. I've chosen customize US dollar into Bitcoin. So we can look at a similar example. So we had chosen a limit price of 17,000. We're going to choose here what is called a strike price, 17,000. So same price. And we're going to put the same amount of US dollar, 7,887. If you look a little bit above, you see that there's a new component added in, which is you now have to choose a maturity date. And you can see some defaults offered here. So like 1 day out or 6 days out or 13 days out, or you can go on the calendar and choose, let's say the 30th of this month, so like a month out. What happens here is that you're being shown an APR. Why are you being shown an APR? Because by taking that market view of not just the price level, but also of a certain timeline. So you've chosen the maturity, let's say 27 days out, right? So like you're waiting, you're going to be locked into that contract for a month, and that 17,000 strike price, you're being rewarded for taking that market view. Why are you being rewarded? Essentially because, and again, this isn't the point of this video to explain options and derivatives and so on, but essentially you're selling a put at 17,000. So you're selling the option to sell to someone in the market who wants to buy that option. So they want to buy the option, the right to sell Bitcoin at 17,000, and you're going to be the seller of that. And so by default, you're essentially agreeing to be a forced buyer, right? So you're going to have the obligation to buy Bitcoin at 17,000 to give the option to someone else to sell it at 17,000. If this looks a bit too complicated, again, do your own research. But this is essentially what's happening here in the back end, right? You're selling a put at a maturity of the 30th of September, 17,000 strike price with that amount of capital invested. And now you see the APR, because the market has moved a bit while I was talking, has gone from 21%, sorry, to 25%. If you look a bit here above, you can see that the two scenarios are explained. Upon maturity, if the market price of Bitcoin is below 17,000, you will receive 0.472 Bitcoin. I don't know if you remember in the previous tab when we put the order for that same amount at that same price, the amount of Bitcoin was 0.46 something, and now you can see that it's 0.472. Because not only are you getting that base amount converted at 17,000, but you're still earning the APR. So you'll get the APR no matter what, right? So if it goes below, you'll be forced to buy. That's the reality of what you will receive means. You'll be forced to buy Bitcoin at 17,000, with your base amount plus the APR you will have received. Same upon maturity, if the market price is above 17,000, you will receive not just your base capital of 7,887, but also the APR. So that's annual percentage rate of 20%, 20.4% over 27 days. And so that is equivalent to 8,007 US dollar. That's about it. Now, I just want to talk about two inconvenience that come with those contracts, because sometimes when people look at this, they actually think that it looks a bit too good to be true, right? You're telling me if I wanted to buy Bitcoin at 17,000, can just go in there and I buy it at 17,000, plus I receive an APR. What's the catch? Or similarly, if you had crypto and you wanted to sell higher, like I can get to sell higher and earn an interest for that? Yes, but there are two risks. One is that you're locked into that contract. So unlike the spot limit order that you can cancel at any time, when you subscribe to that contract, you have to hold it until maturity. And that can be really frustrating because maybe tomorrow, for whatever news, fundamental, whatever happens, you change your market view. Actually, you can't change it. So for the next 30 days, you're locked into that contract if you've chosen a maturity date of 30 days. That can be really painful. The second really painful thing is the market can move against you dramatically. And that's going to be psychologically very painful. Now, you might say, look, I wanted to buy 17,000 no matter what, so I'm happy either way. But the reality is, if the market does move significantly against you, it's not going to feel good. And I can speak from personal experience, right? So I remember when Bitcoin was around, 50, 60K, I had used that contract and the strike price was 45. And I was like, yeah, sure, if Bitcoin goes at 45K, I'm more than happy to buy it, right? And then it was a long maturity and the market started going down and down. And by the time the contract matured, we were in the lower 30Ks. So imagine how stupid you feel when your strike price is at 45 and you're forced to buy at that price, even with the APR, but the current market is at 30,000, right? Like obviously it would have been better to have stayed in cash and to buy Bitcoin in the lower 30Ks rather than the mid 45Ks. So that's for you to, again, judge your own risk profile and the risk profile of that setup. That being said, again, not financial advice. Looking at Bitcoin and the all-time high at 68K, we're now down significantly, right at 20K. So I personally feel a bit more comfortable, and actually I'll show you some of my pending orders, putting those orders at 17,000, 16,000, and so on. And you can see them here, right? So here I've got three orders, 18,000 strike price, 17,000, 17,000, APR around 20%. And I've invested like 9,676, 950, 475. You can actually go on the platform in the details and see, where it looks like, what the price action was, the APR, and so on, the different scenarios. It's a cool way to enter in the asset if you were going to buy, in any case, at a certain strike price. If you haven't signed up on the platform, I invite you to look below or above this video. There's an employee referral link. Or if you're already signed up, I do encourage you to go and check out that tab, play around. I think there's a demo actually in the app, so you can actually play around, or ask questions in the comments, reach out to me directly, reach out to your relationship manager. We'll be happy to help. That's it. Have a great day.